This is Cece. Welcome to the Orbit. It is Wednesday, January 17th. We've got stocks lower to start the day. We're looking at the SPX down about 0.8%. We'll look at Qs in a second. They're down more than 1%. The big story, and we'll get to this in a little bit, is the VIX is sharply higher this week. We're approaching 15.5 in the VIX. We'll cover that in a second. But for now, let's look at the SPX. We've got an expected move for the rest of the day of about 0.4%. We've been seeing 0.4, 0.5% expected moves, 0 DTE. We are already down more than that. You will start to see that if we have continued days like today in a row, you will see that 0 DTE vol pick up. And we are at 21 vol today. We're about 15 tomorrow, and then back into the low single digits. But this is picking up a little bit, and the VIX is picking up a little bit. But for now, that 0 DTE expected move of under 0.5% and being down 0.8%, obviously. Doing 0 DTE trades right now, one has to be aware of the fact that a snapback, if the market were to find buyers, your upper strikes are lower than where the market closed yesterday. We're looking at a condor right now, 4,750 on the upside, 4,710 on the downside. Obviously, if that is a concern, you can always take those upper strikes above. Now that we're down more than the expected move for the day, with the market lower, some traders like to hit that credit put spread with the market already gapped down. Let's look at that real quick. We've got that 4,710 short strike, risking 400 to make 100 on that credit put spread. Obviously, you combine that with a credit call spread if you're legging into a condor, and you get somewhere around that 200 profit, risking 300, but you might be able to get wider strikes if the market were to bounce. Obviously, if the market were to continue lower, you are facing a 0.4% expected move to the downside. On the Qs, we are already down about 1.5%. That is well beyond the expected move. That was about 0.6, 0.7% coming in to the day. We've got a 0.6 expected move for the rest of the day. The other story to talk about here is where we're seeing volatility across the board, especially looking out a few weeks. We've got the VIX up above 15 this morning. Now you can see on that chart just how low we had been for basically from Thanksgiving until now. And what we are seeing, this is something we were talking about on the Orbit the last month, of when might we see volatility pick up. And we had kind of pointed towards this week and next week as a potential, because we've had a market really loaded with gamma, really a lot of traders willing to sell option premium into year end, into the holidays. And then those first week or two of January have also historically seen very low vol seasonality. I think there's this perception that into the new year, there's lots of volatility right out of the gates, but that's, looking back on a VIX, we're going to see some very low levels in those first weeks of January a lot of years, and we saw it again this year. Now we're starting to pick up. We've got a January expiration at the end of this week that could clear some gamma. We've got a lot of stocks reporting earnings. We are basically about to hit the heart of earnings season with a lot of mega cap stocks lined up. We're looking at the Qs. What you would see is if the VIX starts to, we start to see some 16, 17 VIX, it's not that options are now expensive, but you might have missed out on some of those opportunities to set up some of those trades out a couple of months at those really, really low vol levels. Now, this could all just be a blip, and the market could find buyers over the next couple of days. We could have a turnaround Wednesday even. And in that case, you might just see the VIX go straight back down to under 14, let's say. But we are probably unlikely to see those VIX 12 prints for a while. Spring, as we get